Hello, this is Rochelle Agatha, and this lecture is on accounting systems and ledgers and special journals. So what you're going to be able to learn after studying this chapter is you should be able to define an accounting system and describe its implementation on a very high level. You should be able to journalize and post transactions in a manual accounting system that uses subledgers and special journals. You should be able to describe and give examples of additional subsidiary ledgers and modified special journals, and understand the overview process of a computerized system, and describe the basic features of e-commerce. So up until this point, we have just been talking about manual accounting systems and the basic journal, the general journal, and the basic general ledger. So just to give you an overview, if you're going to be an accounting major, you're going to take some kind of a computerized accounting course. If not, this is just to give you a little high level on what an accounting system is. As you know, you can have a manual accounting system or a computerized accounting system, and either way, your accounting system, whatever that is, needs to have a set process. So typically when you look at an accounting system process, it has an analysis, a design, and an implementation process. So if you've ever worked in any kind of business and they have any kind of computerized accounting system, I work in healthcare right now, and it's a very complex accounting system as opposed to something really simple like QuickBooks, if any of you have ever worked on QuickBooks. But either way, you want to implement that system to give you what you need, and so you need to design it appropriately. Once a system has been implemented, you need to get input from the users to make sure that you improve that system as you go, and that's called feedback. So an accounting system ongoing needs to be looked at and reviewed, and like I mentioned, this is really high level because a computerized accounting system involves a lot of different things, and it touches usually several other different systems. So just keep in mind, if you're using an accounting system, there's a lot that goes into it to get the data out of it. Internal controls play a really good big part in accounting systems, whether they're manual or computerized. Internal controls are defined as an integral part of any organization's financial and business policies and procedures. Sometimes companies will have specific internal control policies and procedures, and other times they're embedded in numerous different policies and procedures. Internal controls are set up to ensure that the business information is accurate and ensure that the laws and regulations are being followed. So let me go back to that for just a second. I currently work in the healthcare field, and internal controls are in every policy that we have. The healthcare industry is regulated, extremely regulated by federal, state, local, FDA, all kinds of different bodies. And so there's internal controls. I'm sure many of you have heard of HIPAA, the Privacy Act that controls patients' medical information, and it boils all the way down to not throwing pieces of paper in the trash, to ensuring that when you're looking at patient accounts that you don't leave any information on anything. And that is a lot broader than what you would think, because you might think about a general ledger and a debit to cash and a credit to revenue, and in that embedded is a patient's information. So I just want to say that in this class, as I mentioned from the beginning, is a really overview course. If you're going to be an accountant, or you'll take several more classes. So if you're not going to be an accountant, you probably appreciate the fact this is an overview. But if you are going to move on in accounting, you'll take several more classes where we'll get into more detail in some of these topics. Processing methods are the means by which system collects, summarizes, and reports accounting information. So these methods can be either computerized or they can be manual. And we do a lot of manual in this class. So here's kind of the same thing what I just said. Manual or computerized accounting systems, no matter what way you decide to do it, you still need to properly account for things and use proper internal controls. So the next thing we're going to talk about is actually how you journalize and post transactions in a manual accounting system using subledgers and special journals. A large number of individual accounts with a common characteristic can be grouped together in a separate ledger known as a subledger. I'm going to go through the main subledger. So this is like a spot where you're going to group similar type of accounts. so that you can quantify them. The primary ledger, which contains all of the balance sheet and income statement accounts, is the general ledger, and that's the only one we've talked about up to this point. Each subledger is represented in the general ledger by a summarizing account called the control account. Cash is the control account for the cash payments and cash receipts. Accounts receivable in your general ledger is the control account for your accounts receivable ledger. And accounts payable is the control account in the general ledger for your accounts payable ledger. So we're going to go through each one of these a little bit. Individual customer accounts are arranged in alphabetical order in a ledger known as the accounts receivable ledger. Okay, so you are the person providing a service to your customers. So let's go back to we're that cleaning business, and we clean houses for people and they pay us. So we would have an accounts receivable subledger, and it would just be a listing of all of our customers, the service that we provided, and the amount that they owed us because they hadn't paid yet. So we track all that on an accounts receivable subledger. Similarly, on the flip side, an individual creditor's accounts are arranged in alphabetical order in a subledger called the accounts payable subledger, or the creditor's ledger. So this would be all of our vendors that we are buying our cleaning supplies from. We'd have an accounts payable ledger where we would track all of the amounts we owed. All the detail would be in the subledger, and the totals would be in the general ledger. So this is a way where you don't clutter up your general ledger. You keep your control account on your general ledger, and you put your details on your subledgers. So I'm going to show you, this is our general ledger is off on the left. So here you see our control accounts, our cash, our accounts receivable, our accounts payable. Off to the right over here, you see our AR subledger, and these would be all of our individual customers, and then our accounts payable subledger. These would be all the vendors that we would owe money to. The sum of the customer accounts would tie to the accounts receivable control account in the general ledger. The sum of the accounts payable subledger accounts would tie to the control account, the accounts payable control account in the general ledger. So hopefully that visual helps you out a little bit. Here's another way to look at it. Here's our general ledger right here. Cash, accounts receivable, supplies, accounts payable, etc. You have a ton of accounts in your general ledger. Then for accounts receivable, you would have these subledgers for customer A, B, C, D. And same with accounts payable, you'd have a subledger for creditor A, B, C, D. So hopefully this visual shows you that this is just the detail behind the control account in the ledger. So those are our subsidiary ledgers. Now we're going to talk about our special journals. If you provide a service on an account, you're going to use your revenue journal. Your revenue journal is going to accumulate all of your revenue transactions. Any receipt of cash from any source will be placed in your cash receipts journal. Any purchase of items on account will be housed in your purchase journal. And then any payment of cash for any purpose will be housed in your cash payment journal or your disbursements journal. Okay, so your ledgers are holding balances and detail related to accounts receivable and accounts payable. Your journals, your special journals, are keeping track of similar type transactions. And the reason that you need these special journals is so that you can get consolidated data without hunting through your general journal. So what's left after that is your all-purpose 2-column journal is called your general journal. And all the other transactions that are not related to services, cash receipts, purchases, or cash payments are going to go in your general journal. And now this is where if you think about an accounting system and not knowing if you've done any kind of accounting work or not, if you have an accounting system, you write checks for cash payments and you receive money for cash receipts, and all that's going through your computer system, and it's all going to flow through your control account in cash. So the way that you're going to produce summarized detail is to come in and run a cash payments or disbursements journal, so you can see everything that went out the door, or a cash receipts journal to see everything that came in the door, as opposed to just looking at your cash account in your general ledger and seeing the ins and the outs, which would just be too much volume. So here's another picture, another way to look at it. Here's your revenue journal. So you would, by day, you'd say, you'd list out what revenue you had done. So here you had revenue accessories by Claire. These are just some examples. And they would be recorded as a credit over here as fees earned, and they would be a debit to accounts receivable. So this is the way a basic journal is set up, with the date, the invoice number, the account that was debited, a post reference, an accounts receivable debit, and a revenue credit with a page number. Remember, this is manual. Okay, so let's spend some time on this page. So here's the revenue journal from the previous page. Then what happens is at the end of each transaction, you post the transaction to the accounts receivable subledger. So Claire, Accessories by Claire, has its own subledger. Wrap Zone has its own subledger. Web Cantina has its own subledger. So notice that Claire had $2,200 and $3,000. Wrap Zone had $1,750. Here's a $1,750. And Web Cantina had $2,650. There's a running balance. This post reference comes from the page number, so it stands for Revenue Journal page 35. Same date and the balance. Then you come over and here's your control account in your general ledger for accounts receivable. And see this $9,600? That is the total of all of the accounts receivable debited for this time frame. So it will tie, if this accounts receivable subledger had a running balance on it, it would also be that same 9,600 of transactions. So you had a beginning balance plus your transactions gives you an ending balance. And then in your revenue, fees earned in your on your income statement side of life, there's your credit. So let's just do a cursory one more time. Here's all your transactions in your revenue journal. The total is posted to both the revenue and the accounts receivable. The underlying detail exists in your accounts receivable subledger. So this is, all the journals would work the same way. This is just an example of the accounts receivable side. Okay, then on the other side, when people start paying you, here's your cash receipts journal. So here's your amount of cash that they paid on those amounts that you originally charged. So here's $400 of rent revenue. Cantina paid $3,400. Accessories by Claire paid $2,200. And Wrap Zone paid $1,750. So if you come down into the accounts receivable subledger, you see that each of the amounts posted, here's the $2,200, the $1,750, and the $3,400. Notice that the rent is revenue, so it goes straight over to rent revenue. It doesn't sit in your AR subledger. Here's the total of the amount received on account is posted to accounts receivable. There was the original charge, there's the receipt, and here's the total cash of $7,750. So hopefully that helps you a little bit understand that everything does not just go straight to the general ledger. Things that go through special subledgers then post through to the general ledger through their control account. The fourth objective is to apply computerized accounting to the revenue and collection cycle, just as an example. So let's say you weren't doing it by hand, you were doing it through a computer. The process is that transactions through a computer are authorized, entered, processed, and then reports are spit out. That's really high level. So just to give you a little bit more detail, transactions are entered from a source document. So I'm going to use my healthcare example. So patients come into the hospital and they have a procedure done, and so a charge slip is entered into the system, and the patient has an account on our books. The accounting system will process the transaction, and it'll put it on their account, and it'll generate a bill. Then the data is posted to the control account. So at the end of the month, all of the patient accounting is posted through, and the patient subledger, if you will, or the accounts receivable subledger, ties out to the total accounts receivable on our books. So that is a step in accounting where they actually check that. After the month end is closed and the accounts are updated, then reports can be run. So every month I run reports that show me the patient account balances. We do lots of analysis on patient account balances. I can see the charges that came through, what kind of charges they are, if they were, surgery revenue or, patients staying in the hospital, having inpatient care and whatnot. So the computerized system does this. And it is the same thing as this situation here. So this is very manual. This is just a few transactions. You have to think to yourself, if you had hundreds and hundreds of sick, patients in a hospital, this is what's going on behind the scenes, which ultimately is processed through a computer. But that is what the computer is doing. It's posting the amounts through patient accounts and their subledgers, if you will, all the way through to the control account on the general ledger. Okay, the last thing that this chapter talks about is a little bit of e-commerce, and this is once again really high level. E-commerce is using the internet to perform business transactions. So when you think about it's both buying and selling, e-commerce is also known as e-business. So people buy things through the web a lot nowadays. And so let's go back to the more simple example of our cleaning business. And you might be buying your cleaning supplies online, and once you go through the web, then you're considered an e-commerce, and that brings up transactions related to debit and credit cards, the transfer of money without a check, and it is its own accounting topic, but I did want to touch base and let you know that it is still processed through the general ledger and the journals, just like every other type of purchase or sale transaction. And then when transactions are between a company and a consumer, it's business to consumer and it's e-commerce. So you have to, it could be between two, a business or two people. It's still e-commerce if it's going through the internet. Three more advanced areas where the internet is still being used for business purposes include supply chain management. Nowadays, a lot of supply chain management goes through the internet. Consumer relationship management, and product lifecycle management. And these are all separate courses if you're moving on through business at the 4-year level. So just keep in mind that e-commerce affects accounting. So the summary for this chapter, and I know I covered it pretty fast, so you need to read the chapter. We went over accounting systems, just the basic fact that what we're learning can be done in an accounting system, and for the most part we're all really happy about that because it saves time, produces a higher level of information. We learned about subledgers, accounts receivable, accounts payable, and the fact that those subledgers house the detail and the summary is posted into the general ledger. The general ledger holds our control accounts. We learned about our special journals, cash receipts, cash payments, revenue, and purchase journals, and we touched on e-commerce. So that's it for this lecture, and if you have any questions, let me know. Otherwise, attempt the homework and turn it in by the date that it's due. Thank you.